Well, LG Electronics reported a weak set of numbers. Lower sales, higher input cost of copper as well as aluminium, and rupee depreciation. Put that together, that impacted margins. To discuss more on LG Electronics, we have the Director and CEO, CSMO, Mr. Sanjay Chitkara, as well as we have the Chief Accounts Officer, Atul Khanna, who join us on the show. Hi, Sanjay and Atul. Thanks a lot for joining in. Well, a quick question first with regard to the way ahead. You have indicated in your press release that you're seeing healthy demand trends heading into summer. Could you tell us what are the early indicators that are giving you this sort of confidence that things will improve from here on? Brief us with regard to the channel inventory currently, if you compare it on a year-on-year basis.
We see good demand signals in quarter four, and in the summer range is very high, and we have seen the worst last year.
Sanjay, I think we're having a bit of an issue with your audio. Let me go across to Atul. Atul, will you want to weigh in on this?
See, am I audible clearly?
Absolutely, crystal clear, sir.
So, as you asked about the way forward, right? And as we have seen, the year started with a very positive note, where we have seen that sellout trend in the month of January is very encouraging, and the consumer sentiments are changing towards a positive outlook as the GST rate cut happened, which may give an leverage in quarter four also, and in the long run also, in the terms of demand for the air conditioners and the large screen size televisions, along with the other premium appliances of washing machine and refrigerator. And we have seen a good high sellout trend in this quarter, this beginning in the month of January.
Okay.
And February also has started okay. With respect to your next question on
Inventory
levels, we have taken a conscious call in the month of, especially in the month of December, post-festival season, Diwali. We have given a chance to the trade partners to realign their inventory levels. And that is one of the reasons that our top line has shown some softness. And if we talk about inventory levels are there in the market, but it is not that high as comparison to quarter two and quarter three levels. So this inventory level has come down to a very lower level. As the summer season picks up, the inventory level for the compressor products, especially air conditioners, will go up, whatever left. Whereas we have started, very important to note here is we have already started supply for our new B norms air conditioners and refrigerators in the market. So this will give a good momentum in quarter four. And we are hopeful and very much positive that we will recover the shortfall we faced in 9 months period in this quarter.
Okay, so you're bracing for a stronger showing in quarter four. Got that. Let's focus on the margins, and we have Sanjay as well. I'm told his audio is back, so good to have that as well. The margins have contracted, gentlemen, by around 270 basis points at around 5.1%. Could you break it up for us? How much of it was because of operating deleverage, input cost inflation, currency, and also this recycling as well as AMC costs separately? Could you break that down for us? What caused this contraction?
So,
yeah, Sanjay.
Atul, you please go ahead.
Okay. The margin contraction during this quarter is also, I will say, a temporary phase, particularly where the headwinds related to RMC cost, FX burden, and more importantly, the operating leverage, which has given an impact, along with the one-time impact on the new wage code, as well as we have done, a very important to note here is we have done advanced pricing agreement with Central Board of Direct Taxes, where we have, I will say, remove, reduce, or I will say, make the contingent liability related to transfer pricing litigations and the royalty payments to our parent company made to zero. So, in lieu of this signing of a advanced pricing agreement with CBDT, there is a one-time outgo on tax payments. We have already provided for in our books in December, which particularly has put a pressure on our net profit after PAT, I will say.
Right. So just so...
as you asked on the other fronts of the margin front, the RMC weakness and the FX burden
Yes.
and compliance costs related to electronic waste,
Hmm.
these are normally has a little headwind, though we have increased the prices also for refrigerator and washing machine,
Okay.
even though the trend was a little another way. And then it has impacted our margins, but it is one top and the sales cycle in quarter three, sales cycle is also very smallest portion in
Got
our
it.
business
Got it.
for a whole year business.
Got it. So, Atul, you have given us some clarity with regard to why the margins were impacted. Given the price increases, stability in the rupee as well, do you think in quarter four you get back to high single-digit or double-digit margins? Could you help us out with that? And given that January has seen a strong start, what kind of revenue growth should we look at for quarter four?
So,
On the Sanjay ji, please, sorry.
so quarter four, as I mentioned, is we are seeing a good demand signals,
Yes.
and India summer season is very cyclic. So last year we have already seen the worst where there was a cool summer. So this year we are very hopeful that there will be a hot summer. And quarter four is structurally very big for us. It contributes roughly 28% of our business, and which is very well supported with the seasonality and operating leverage. As mentioned, the demand is improving, and channel inventory is now very much healthier, and affordability of our products has improved with GST cut.
Yeah.
And we have also strengthened our product portfolio. Like we have introduced many missing categories where we were not present, like French door refrigerators, bottom freezers.
Gentlemen,
They-
if I can just come in, apologies.
yeah.
Sanjay, so, home appliances is 75% of your business, right? Electronics is the remaining. My only question is, Q3, the quarter for which you've reported, that was home appliance sales were down 10%. But the GST impact came through in the third quarter as well, right? It should have showed up to some degree.
So, see, quarter three is actually very small for us. It is roughly 16%. And the whole industry was broadly impacted with some external factor, as Atul has mentioned, which is mainly the timing effect and some external factors. Like Diwali this year, earlier in October, whereas last year it was in the month of November,
Oh.
which gave us a very less festival window, which we could not able to fully monetize the whole festival period. And at the same time, GST implementation also created a bit confusion. Customer waited for the price clarity, which impacted the sales rhythm.
So both of you have said that January started off on a very good note. This quarter started. Could you quantify that? What's the acceleration as compared to, say, January last year? Just we won't hold you to it, but broadly.
Broadly, it's a high single digit touching double digit in a growth factor.
Okay.
And early double digit in margins also. That's
Okay.
what in quarter four we are uh, uh, trying and we are likely to achieve. That is what I can say right now. And being a sales leader, our
Yeah.
always efforts are to achieve better and higher growth.
Yeah.
And
Yeah.
recently, a new opportunity has also arisen from evolving US tariff and EU FTA. Uh, and these developments are creating a new, more favorable opportunities for company like LG Electronics, who are very much aligned with Make in India drive. We have global presence and a global demand. So our upcoming factory, which is already on the way,
The Sri City one, yeah.
Yeah.
No, I'll and of course that should be up and running as a big one. So just to tie in that, right? You're saying January sales growth is almost double digits, right? Is running at January over January last year. So it started off on a positive note. Margins, which for the last quarter were around 5% EBITDA margins, you're saying is early double digits, is what you're saying. And what's the sustainable trajectory for margins, Sanjay, if I can ask you that?
So whatever what we can, there is, some regulatory issue. I cannot give you the forward-looking number, but what we are trying is an early double-digit EBITDA margin for the yearly basis. And whatever business we lost in quarter 2 and quarter 3, we'll try to recover so that at least we make a flat 2000 financial year 2026, despite of all headwinds. And notably, despite of all short-term challenges, we improved our market share this year.
Okay.
If I talk about our market share improvement, in refrigerator, it was 0.4%, TV, it was 0.7%, and AC also, we improved around 0.6% market share.
Got it.
And our brand health is very much intact. We have created a historical biggest gap with a number 2 player this year. So everything, there is no fundamental issue with the business. And we are think the things, these temporary factors are erasing,
Got it.
and we will backtrack to, and we are fully prepared for a much better quarter 4.
All right, Atul as well as Sanjay, the street is hearing you all clearly. The stock was down close to 7.5%. It's recovered considerably. So clearly investors are hearing out what you'll have to say. The point on exports, I think even before India got into that deal with the United States on the trade tariff issue, you all had mentioned that the US market was something that could grow big time in the coming years. Could you tell us what is the current contribution? I think it's very, very small. But in the next few years, do you think that 4-5% of your revenues could come from the United States? Should it be close to around 800 to 1,000 crores?
See, it would be very early to say about this, because it has been just declared and implementation will take some time.
Yes.
Talking about LG, our current export is roughly 7% of our revenue, which is amounting $160 million US. And as I mentioned, the current developments are more favorable for companies like LG Electronics, because we have global presence, global demand, and we are strongly aligned with Make in India capabilities. And as I mentioned, our third plant will be operational by October, and we will expand our export from there. Currently, we are exporting to Middle East, Asia, African countries, Southeast Asia. But going forward, the current developments will open many new opportunities for other developed economies. And one good thing is, because these countries' demand pattern is different than the current countries where we are supplying our products. Currently, we are supplying only volume and mid-zone products.
Got
But
it.
there is the demand for premium products, which
it.
early we were also importing. But recently, in our Pune plant, we started producing high-capacity refrigerators and side-by-side refrigerators,
Correct.
where the consumption of these products is much higher in Europe and USA. And our factories are quality standards are much better, and it's approved by these countries. And we have now a cost competitiveness also with government support.
Got it. Got it. Sorry to comment, Sanjay, but to give a number, I think you're doing close to 750 crores of exports right now? Annually?
Yeah.
But yearly export is 1,400 to 1,500 crore range
Right now.
right now in a year for full year basis.
Okay. And how do you
So
see
we are
that number scale up, sir?
So we are expecting in going forward year for fiscal year 27 and going forward, we are very much optimistic that we are aiming to double our exports led by our premium products as we are manufactured in India to US and Europe along with other geographical economies, new geographic economies. Our core focus remains consistent that make in India, make for India, and make India global to expand our export horizon.
Got it. Thanks.
Thank you very much, Sanjay and Atul, for joining us, and look forward to new innovations, new products, more exports, and of course, better growth and better margins as well, which you have sort of in a way guided towards for the rest of this year, and of course, on a sustainable longer-term basis as well. Thank you very much. So that's LG Electronics stocks at what, 1476. It's a play on premiumization. I mean, they're going to premium, they're going to premium, affordable, wide range of products. And of course, because of the global parent, R&D spends are pretty low. But of course, I mean, that's because they get the technology, the global technology from the parent in that sense. So stocks are not done well since listing. We'll see how this one plays out.